and welcome to the webinar that will cover the topic on accounting for non-financial assets. The 7th webinar, our CEF Webinar Series for 2017. You find other learning initiatives that were delivered in 2017 are planned to be delivered by the end of this year. You can find them online learning campus on CEF's event site, where you will find also the brochure with all learning program for 2017. Pro for 2018 will be published very soon. A few questions suited you all, and will presenters rights only to speakers, so the quality sound stays better during the whole webinar. We invite you to send us questions and your comments during the whole webinar. You can use the chat area which you find on your screens in the right corner below. Message, please select send to everybody so that we can all see what is your question. If the question addresses a certain speaker, please indicate to which speaker the question is intended. So, your questions during the whole webinar, we will answer on your questions at the end of the webinar when all presentations are delivered. In lack of time for all the questions, or if you think of any questions after this webinar finishes, you can send them also to my email address. After the webinar ends, you will get the survey where you will have the opportunity to comment to our questions. Well, is recorded and it will be published on CEF's events website. For all you enrolled in the webinar, you will receive also presentations that will be delivered in the webinar. So we will presentation with Suzanne Flynn, who is a regional PFM advisor for Southeast Europe. We'll speak about the background on transition from cash to accrual accounting. She will talk about trends in coverage of government and discuss the valuation issues. After that, Noel Lapworth, independent public policy professional, will the accrual accounting for non-financial assets. Finish the webinar with 2 country presentations from Republic of Slovakia. So I would like to give Suzanne Flynn
Yes, is that okay? You can see the screen?
Notation. You need to share it to the tab Quick Start on the top.
You can now?
Yes, you can see it. Great.
Okay, very good.
Great.
So thank you, Yasmina, for the introduction. I'd like to just start by giving a brief overview, which hopefully will frame some of the later discussions topic, management and accounting for non-financial assets. By way of background, I'm based in Ljubljana and covering 6 countries in the region: Albania, Macedonia, Bosnia, Kosovo, and Serbia. Without further ado, I will continue. I should also say that I'm financed by the European Commission. Look at the background, try and define non-financial assets. Now, balance sheet coverage, certainly from a statistical perspective, has developed the last 10 years. Valuation issues and potential data issues, and then some summary of things to think about going forward. Background. Countries in the region have a stated intention to move to accrual accounting, predominantly cash basis or modified cash basis. But when we look at PFM reform strategies, the stated objective is generally compliance with ESA 2010, so statistics for production of accrual-based statistics. But one problem that I have with this, when trying to advise governments on how to sequence reforms, is what are the specific fiscal policy and management objectives of a reform that intend to move to accrual accounting? What do countries expect to benefit from this reform, or is it just producing accrual-based statistics? And I'll discuss a little bit about some alternative approaches, if indeed this is the primary objective. There is a common perception that accrual accounting is mostly about non-financial assets and depreciation charges, but perhaps not the most important to be thought about. It's something we need to plan for, and it will be a very time-consuming process. There are other elements that perhaps are more important to be recognised on the balance sheet before non-financial assets. And of course, I would suggest those would be accounts payable, debts, equity investments, and so on. So more financial assets and liabilities, if we think about non-financial assets and liabilities. But this, of course, is around sequencing. So as we will discuss over the course of the next hour and a half or so, the actual of putting together your asset register and values means that the tasks that you need to undertake need to start fairly early on in the process before non-financial assets would be recognised on the balance sheet. So I said earlier about objectives, it's important to be quite clear on what it is you're trying to achieve, what the information requirements are looking for out of your financial statements to help fiscal policy decisions or measures in deciding how to financially manage their service delivery. Okay, so perhaps just quickly think about, I'm giving an echo here, I'm afraid. The differences between the purposes of statistics versus accounting. General statistics tend to be more macro-focused, so they're used to analyse and evaluate fiscal policy decisions and to look at the impact of the government sector or the public sector on the economy and compare national and international outcomes. So they're more kind of macro in their focus. Financial statements, on the other hand, are used to evaluate financial positions of entities and those that they control, and importantly to hold management accountable and to inform management decision making. So between the two, statistics are much more, I guess, related, whereas financial statements we think of more as a mechanism for management and for holding management accountable for decisions that are made. So quickly to look at what we mean by something called fixed assets. Usually the definition are goods that are used over more than one financial year by the government or other public sector entity for delivering its functions. They should be recorded on the balance sheet as either physical or intangible assets, and they would also include stocks of goods, so-called inventories, for consumption in service delivery. No definition there. Property, plant and equipment is recognised as an asset when it's probable that future economic benefits will flow to the entity and the cost of assets can be reliably measured. That's an important point. So this really shows one for classifying non-financial assets, and this is based on the German publication, but nevertheless it's a very good way of looking at different classes of assets. And on there I've put where there is a relevant international public sector accounting standard. So it's divided into produced and non-produced assets. Non-produced would include tangible and non-tangible. So here we're talking about land, lives, and those assets, patents, and standards 17 and 31. And they're a very good source of guidance when you're looking at doing accounting policies for recognition and valuation of non-financial assets. On the other side, we have fixed assets, these are produced assets, so they're fixed inventories and valuables. Fixed assets have a number of IPSAS which are used as a guide, could be used as a guide. IPSAS 31 again for non-tangible, and IPSAS 17 for tangible assets, building, structures, machinery, equipment, etc. Agricultural assets have their own standard, IPSAS 27. But the standard there would be IPSAS 17. Inventory has a separate standard, IPSAS 12. Valuables. Now, valuables, no standard currently, but IPSAS board has issued a consultation paper on heritage assets, which is about when to recognise and value, suggests a framework for recognition and valuation of heritage assets. Countries differently, but in a significant value, how we actually met is the particular challenge with things like statues, monuments, the crowns, for example, in the UK. I mean, how exactly do we value them? And there's a consultation paper on that topic. I think IPSAS has prioritised that in their work plan. Since 2003, there from the dark blue, there are a few countries with a full balance sheet. Some balance sheet, either financial or recognizing liabilities, and quite a few with nothing at all. Changed. So more countries are moving in to 2013 to producing a full balance sheet. This is a trend that's recognized across the globe. It's probably worth mentioning some of the differences in valuation approaches between statistics and accounting. CFS is quite clear that current market prices should be used for all assets and liabilities, but does allow for alternative valuation methods where there's no market. And has a really broad scope of choices for valuing assets. So it says fair value, which is market value, historic cost, and there are other bases that it allows. Specify that similar group assets must be valued consistently, and the bases disclosed in the notes to the account. Cost. I personally would question the usefulness of historic costs, but it's probably, for opening a balance sheet, it may be the most dramatic valuation to use that is available. In many cases, getting historic cost data is quite so as easy as we might suspect. Do encourage disclosure of fair value if there is a material difference between the reported cost and the items of fair value. So what that would enable, and I think Noel will talk a little bit more about this in his presentation, is for managers to make decisions about what to do with the asset, whether it's something that can be used more effectively if it's fair value, maybe it can be sold or used in service delivery. IPSAS do allow entities to choose between fair value and historic costs, but of course must be disclosed in the account. When I started the presentation, I talked about this objective of countries to comply with European System of Accounts 2010. I just thought it's worth mentioning that there is a method which is more macro. It's more macro-based that statisticians use to value non-financial assets and to determine a broad value based on historic data and estimates of acquisitions and disposals over a significant time period. So the point I'm making here is if a country's objective is just to produce a statistical balance sheet, be aware that there are other ways of valuing non-financial asset stock. Putting that out there for you to think about. Just a little bit about what IPSAS 17 says. Remember, that's the IPSAS that relates to produced assets, property, plant and equipment. So they say initially they should be measured at cost. At cost means the purchase price, so that will be whatever the entity spent on purchasing the asset, which of course, as I said earlier, the data might not be that available if records have not been kept or they've systematically or have been lost. And of course that should be depreciated or impaired appropriately. Exchange transactions. An exchange transaction, IPSAS speak, means where there's been an exchange of or there's a value exchange. Non-exchange transactions is where there's basically a donation. So they should be measured at fair value. And what the market value that willing parties will pay for that particular donation. So really it's an estimation. Subsequently, IPSAS gives two options: the cost model, which is historic cost less accumulated depreciation and impairment losses, and the revaluation model, which the asset is revalued at a print frequency. I would suggest that would be in the accounting policies, as indeed the method of evaluation should be in recognition. So they could be market values, reproduction cost or replacement cost, or depreciated replacement cost, or the unit approach for specific types of assets. Just here some of the issues that need to be considered. And I reiterate this one again because I think it's important. And I'm going to now do a little bit of marketing for a nice publication here which talks about implementing accrual accounting in the public sector. We'll provide the link for you on the right, but it does provide some guidance on accrual accounting, including having clear and agreed reform objectives that will shape the sequencing and approach that you take when you plan for the reform. asset registers, I think if you're looking at the non-financial assets aspect, is to look at the existing quality of assets data, where asset registers are complete. And the Supreme Audit would generally know or commented in its report on that information. What my experience tends to be that asset registers are quite good when we're looking at items of equipment and furniture and so on, possibly, but when it comes to the state assets, lands, buildings, monuments, it can be very fragmented and so different entities might have different quality of information or different systems. And look at what data management systems are in place and how eventually that information will be brought into the government's general ledger for production of the financials. The issue to accounting policies is thinking about capitalization thresholds. So what is material in terms of so if there's a lot of low value assets, you could be wasting a lot of time and resources including them on the balance sheet when you're missing the big assets that really will influence policy decisions. On valuation, you need to look at what is the capacity in the country to value assets, particularly the large ones, land, buildings, other movable assets perhaps. Are there a body of professional valuers within government? I think more advanced countries, if you look at the UK, there is a separate institute of valuers that sets standards, etc. Do you have this in your country, and who will be responsible for valuing assets and setting the standards? It is an art, not necessarily a science, but you do need to think about that. And so look at any available proxies. What kind of information, for example, do the tax authorities have on the value of assets, land, for example, if they're taxing land and property? So I think of thinking outside of the box to see what's available, making some pragmatic decisions on how valuations come down using existing information. The fourth or fifth comment that I think should be borne into consideration, taking account of everything else, is how much is this going to cost in light of your objectives. So I think when Noel talks in his presentation about some experiences in other countries and in the region, if non-financial assets, what is likely to be the cost, and will it really bring the benefits? And will the decision-making be enabled to allow managers to make appropriate decisions regarding non-financial assets? Sequencing, I've alluded to this a few times, looking at when to recognise non-financial assets in the balance sheet, perhaps focusing at an earlier point on a financial balance sheet while you're undertaking your preparing a register and looking at valuation. Will need to be developed. Standard set, of course. Who will do that? Will it be an independent body, or will it be done by the Treasury? Different countries use different approaches. And then making accounting data useful. So you need to involve the state audit, statisticians, valuers that may be available in country, service delivery managers, and other stakeholders. So I advise you to set up a group, a steering group in this kind of reform. So you can actually access knowledge. I haven't had what I didn't include there was the tax authorities. I think some countries have found that they hold quite a significant amount of information that could be useful. And finally, and most importantly, training. I will emphasize this, but this is not a technical reform, it's also a managerial reform. Who will be using this information? Is it just the Minister and the State Audit, or do you really want the broader involvement of individual managers of entities, of parliamentarians, the public in general? When they cheat, how do they interpret it, and how do we train people to take notice of what's been done in this area? So those are the comments I'd like to leave you with, and perhaps now I'll hand back to Yasmina.
Thank you for warming us up with your presentation. It is very important that issues that still need to be addressed. You gave us also very good framework for further discussion of non-financial assets. I know that you have to leave the webinar already now. So I would like to invite listeners to send the questions that are related to your topic, and perhaps you could write an answer at a later stage, and we will send them reply to their questions. Thank you very much for joining us, and I wish you a lot of success.
Thank you, Yasmina. Thank you, Noel, Ivana, and everyone else. Thank you.
I would like to encourage participants to mute their microphones so that they have interruptions of sound. You find the two buttons under the picture speaker. You will see the green camera, and if you mute your microphone, it becomes red colored. We are so limited with time, so we have to consider that our presentations are delivered up to 15 minutes, so that we have also time for answering your questions. And I would like to give my word to the next presenter, Noel Hepworth. He's an independent public policy professional, and he also works at CEF as he delivers at CEF in workshops that are related to internal audit. Noel will introduce us how the role of manager is very important in the accounting reform. He will speak also what decisions managers are responsible for. We had already Suzanne announcing how the training for managers is very important in accrual reform, and is a lot of and is often overseen. So Noel, I will give the word to you, and please you can present your topic.
Can you see the presentation?
Yeah, we see it. You just need to, yeah, exactly.
Okay.
Great.
Well, good morning, everybody. Good. I'm going to talk about accounting from the point of view of the service manager. And I have to make the point that Sue has made. Changing accounting is much more than a technical accounting reform. We should all look upon it as a management reform, and information that's provided by accrual accounting should be used by the manager. But fortunately, in the countries that I've seen, must regard changing accrual accounting as only a technical accounting reform. But this is wrong for the three reasons that I've given here. First of all, it's about providing information to managers, and we need this, and we use efficiency and effectiveness, but we do not know what they mean in practice and what the implications of them are in practice. And second, very importantly, managers accounting. I'll talk about some examples of that. And thirdly, we have to remember that accounts produced using accrual accounting are far more complex than cash-based statements, and managers are the people who need to understand them, and they also need to be able to explain them. In research, he makes it pretty clear the rate of support that is needed, the rate of activities are needed in order to ensure that accrual accounting is introduced properly. HR, managers, making sure that it's not seen as something just to do with finance and so on. So please do bear that in mind. So what about information for management? Well, talk about using resources efficiently, but the best place to use resources efficiently is the manager, the service manager. He knows more about service than anybody else. He may need to be prompted, he may need to be pushed, but nonetheless, the person who knows most about it is the manager. It's not the accountant, it's not some Ministry of Finance, it's not some other independent body or the auditor, it's the manager. Accrual accounting provides the manager with information about, and we're talking here about one particular item, that is the employed in the form of assets. Accounting doesn't do that, but accrual accounting does, and a responsibility of the manager is to use the capital employed as efficiently as possible. But to do that, he knows a number of things. Now, two crucial things are that he knows the value of the assets for current use, because these will appear in the financial statements. I personally think that to continue to use historic cost is the wrong going about it, because it doesn't give the manager the information about what these assets are really worth at the present time. He also needs to know what are they worth for the purpose. So if you have a school in the middle of a town, but use that enormously more efficiently by getting rid of the school and replacing it somewhere else, and I've got examples of that. Use the capital which is released to significantly improve the quality of the public services that are provided. So you need to know very often alternative uses, values for alternative uses, is searching for value for money. If you want to improve the way in which public capital is employed, you have to think about not only the current value, but what alternative use values are as well. They sometimes very, very different indeed. A lot of problems, and incentives are required for the manager to act to the level of capital employed. We should be aiming to try to reduce or use efficiently the amount of capital which is employed by the public sector. And there are disincentives to doing that. The laws which prevent disposal of assets, it may require closure of facilities or facilities. So if you think of one country, the Ukraine, it's got lots of health facilities, but in fact there are many health facilities, and it would be better in many respects if they were consolidated. If you consolidate them, you can make more effective use of those assets. So you can have a lot of health assets, but a poor quality of service. How do you improve the quality of service? And therefore this will mean that you would have to think about the assets that you use. It will make the changes in power structures within organizations. And changes in power structures can be very difficult to manage, especially when they affect the interface between the official and the politician. Changes may require fewer staff to be employed, or they will generate a need for retraining and reorganization, which many will object to. And then all difficulty, I would argue, will distract us from our main objectives. When it comes off, then they're always going to be concerned with the budget. No matter how prepared, they're always going to worry about the budget. And if the budget is cash-based, then financial incentives exist to reduce the cost of capital. The Minister of Finance takes them to cause a manager to reduce the cost of capital. And the ad hoc incentives, if the Ministry of Finance is going to put pressure on organisations to use their capital more efficiently. But if it is accrual-based and operates allowances for depreciation, asset impairment, as well as a charge for the cost of capital, then you'll get systematic incentives of capital employed. But to change to accrual budgeting is a very difficult technical and not an easy thing to do at all, and very few countries have done it. So we have to rely basically on the existence of cash-based budgets, but accrual-based accounts, and in turn raises its own set of difficulties which countries need to think a great deal about. One incentive, which again don't think about, is how allowing a manager, if he has ways of saving capital, to use some of that capital released for the development of the manager's own service. Briefly to accounting decisions, manager, because normally the manager is not involved in accounting decisions. As Susanna said, accounting policies should be decided by the Ministry of Finance or even an independent body. But the action of them should involve the manager. It is regarded as a management tool, which is what it should be. Then a manager needs to make decisions or to agree such items as asset values, lives, judgments about depreciation and impairment, valuation stocks and losses on stock holdings, provisions, contingent liabilities. He's got to think about the segment analysis, and he's to think about the information to be disclosed in the accounts in explanations of variances from the budget. And this becomes more complicated if the budget is on cash and the accounts are on an accrual basis. This is, who is the manager? Who is this manager? And in many countries, it's a politician rather than servant, but trained. And is completely overlooked by countries changing to accrual accounting. I have seen clips of investment in the training of managers in many countries. A civil servant, but how do you train a politician? So if the service manager as a politician, then real difficulties in you and gain the benefits from accrual accounting at the service manager level. And whose finance are they? Are they the manager or the Ministry of Finance? If ministries' financial statements, they are the statements of the manager. On the statements of the government as a whole, then statements of the Ministry of Finance. And who will have to explain them? Who to make the explanations to the civil society, to the user of public services? Who's going to say what should not be done? So this here, which are usually not addressed, but in my view do need to be thought about. Own and be responsible for the accounting decisions. The manager should be responsible for preparing and presenting the financial statements and the report. There is always to be a covering report. But the manager can only be accountable for those financial statements for which he or she is responsible, such a particular ministry. But the only financial statements are those to be produced by the government as a whole, which many think about them, just one set of financial statements. Even if the Ministry of Finance is responsible for preparing and presenting the financial statements, when it comes to the utilisation of capital assets, this manager's point of view, or the user's point of view, because the service user will only think about those assets which affect him or her, only the manager can answer detailed questions about assets in particular ministries. And we'll have to face is that if you think that the only financial statements are government-wide financial statements, then one will actually own them as a manager. And if he owns them, can then capital stock efficiency gains be achieved? So how these sorts of issues need to be addressed. Developing and transition economy countries publish only financial statements for the government as a whole. And the question is, can the change to accrual accounting cause to continue if efficiency gains? Do you to make efficiency by making better capital stock? If you really wish to make these efficiency gains, they've got to think about the whole presentation of the accounts. Are they to be by individual ministries and wide? This is a question that needs to be very carefully thought out. 3 slides on risk. Now, if you change to accrual accounting, increases risk because it's not about specific forms and checklists, as I've seen some countries try to introduce accrual accounting, but they are principle-based. They don't give a lot of detail. Your policies will give you a lot more detail. So it's technical risk. Imitation of those accounting policies or wrong applying them. Inappropriate judgments, because very often you have to make judgments about values, about impairment and so on. The estimating errors. A lack of understanding of the complexities of accrual accounting and how transactions should be recorded. And budget control is weakened, again for the reason that budgets will be cash-based and for more elaborate reconciliations will be required with cash-based accounts. And there's these possibilities of corruption. Managers can falsify reconciliations between cash budgets and accrual-based accounts. They can make the values of assets to incur proper disposals, and I've had that criticism made to me a number of occasions, or state revenues, for example, to avoid criticism. Internal financial control, and what about it? Well, managers must be trained, if at all possible. And if possible, because if it's pull-ups who are the managers, then that's difficult. Management training is a major investment, as Malta has said. Transition to accrual accounting. In the United Kingdom, this is one of those significant costs that should be enhanced. Can't introduce accrual accounting by just preparing standard forms and ticking boxes. I mentioned the problems of valuation of assets. In my view, if we make effective use of capital stock, we have to think about the best way of valuing assets, and I don't think it's to do with historic costs. It needs to be some independent assessment of the appropriateness of accounting policies, because otherwise they could be developed in a way which favours the public sector at the expense of the private sector. That's a technical argument, but it is an important one. Accountants need to have the status and ability to object to managerial decisions that they are as inappropriate. So that does mean that accountants need to be very trained and have significant reputations. Greater attention should be paid by accountants and internal auditors to reconciliation between accrued accounts for the reasons that I've given. In terms of the statements which are to go with the financial reports to ensure that there's consistency between what the financial statements say and what financial report says. That means that internal auditors should be trained in accrual accounting. As a result, should be reassessed, to be refocused. And should be a statement, an annual statement about the quality of the internal control, and that will need to be modified in order to reflect the additional risks that arise. my conclusions are that we should listen to the lesson from Malta, the perception that the change to accrual accounting was something only to do with the finance staff and accounting. Take on board that message very strongly. One aim of accrual accounting is to make more efficient use of capital stock, and it would be. The manager must be involved. This also means that the question is as to whether or not the production of a single set of financial statements be good, and it might be better to have financial statements for each ministry as well as a consolidated government statement. To benefits, though, you've got to think about the incentives for managers and the disincentives that presently exist, and also increased, meaning an enhanced role for the internal control and internal audit acts of the organisation. Brief summary of the interests of the service manager. Thank you very
much. Thank you for tackling with the importance of managers' roles and necessity of the training that needs to be delivered. Accordingly, I think this is a very good background to continue the discussion and to see how the accrual accounting and how the non-financial assets are measured and recorded in Croatia and in Slovak Republic. You already answered on Gorana's questions. If there is anything additional to be questioned, please send us your comments and questions to the chat area. Jakir Bajo will be next speaker, the Chief State Treasurer in Croatian Ministry of Finance. Although Croatia modified accrual accounting principle, you will present how the non-financial assets are not reported in the balance sheet, and we're interested to hear how is accounting and recording of non-financial assets organized in Croatia. What are also the main findings of Croatian State Audit Office? So I'll give you a word, and please have your presentation.
Thank you. Hi to all. Do you hear me?
We hear you.
Okay. My presentation is focused on the challenges of the Ministry of Finance to cover non-financial assets in financial statements of the state. The problem we face are similar to those of other countries in our neighborhood, but we can certainly discuss it later. At the very beginning, I'll say something about the government accounting system in Croatia. Then I will present the state audit findings related to non-financial assets. Look at how we solve, or better to say, try to solve the identified irregularities. Okay. In addition, the modified accrual basis has been implemented in financial reporting for the first time in 2002. But budgets still happen to be prepared on a cash basis, and no, I'm happy with that. In addition, accounting framework in Croatia has been set up as a law-based system. National public accounting standards have not been developed. Despite the existing of national public sector accounting standards, the appliance of IPSAS have been annexed as obligatory. You asked me that yesterday. Thought the implementation of certain accounting solutions defined by IPSAS has been recommended by Croatian regulation. But the important feature of Croatian government financial reporting model, based on, as I said before, modified accrual accounting basis, are as follows. revenues are generally recognized on the cash basis. Expenditure and liabilities are recognized on accrual basis. And it's important for our topic today is that expenditure regarding the non-financial assets are not capitalized, but treated as an expense in full when obtained. So this further implies that assets are not being depreciated yet based on estimated asset usage period. I can say that this is current situation, but there is no any movement or plan to change this situation. Of course, that we are waiting for the result of EPSAS project. Estimation of the value of the non-financial assets is basically carried out according to accounting principles, but with the application of historical cost method. For those who are with us today and just entered, I could say, in the world of accounting, just to say, historical cost is a measure of value used in accounting into the price of assets or balance sheet based on nominal or original costs acquired. The cost of acquiring in Croatia includes, similar as Susan mentioned, purchasing price incurred by non-refundable taxes, cost of transport, and all other costs that can be directly added and connected with this procurement. Choice between fair value and historical cost accounting, I would say, is one of the most widely debated issues in accounting literature. And I do not want to open it now, especially because I do not agree with Susan and Noel. But just in sentence, managers most often use fair value when the cost of obtaining reliable estimates are relatively low. I could for more liquid assets such as property and investment property. But I said in Croatia we use the historical cost method and we are fine with that. Now, colleagues from other countries who are practitioners know that we very appreciate the State Audit Office findings. The State Audit Office has a legal obligation to review the budget execution report that is made on the cash basis. Of course, the budget is made on a cash basis. But what is important is the budget execution report, the government has to submit it to Parliament. In the same time, the State Audit Office also revised the financial statements, budget also, which are on a modified accrual basis. What's important to emphasize here is that we are sending the budget execution report to the Parliament, but not financial statements. But for many years now, the State Audit Office has pointed some shortcomings in balance sheets related to non-financial assets. State Audit Office determined that in balance sheet of the state budget, no data on non-financial assets. Data on non-financial assets are reported. The balance sheet contains the only data related to financial assets. Also, the data that is important to emphasize, all the data on data on non-financial assets exists in the financial statements of budgetary and extra budgetary users, but not in the balance sheet of the government of the state treasury. But all the data exists, they are not systematically reported, nor contained in the same place. The asset is recorded at, for instance, at one budgetary users, while the other one uses it. Or there are disputes being led on certain types of non-financial assets in terms of determining the ownership or part of ownership, which may last for a longer period of time, I think that this is common also for the Croatia, Serbia, Bosnia and Herzegovina, possible Slovenia. The assets is recorded at one budget. I already mentioned it. Sorry. Clearly, the State Audit Office starts from the core of the problem. It said the assets register is condition for efficient management in disposal of state-owned assets. The register was, and who is listening to us know that, the register was published in January 2014. That was a step forward. According to the law, the register should deliver to the Ministry of Finance the data on non-financial assets for the purpose of preparing financial statements. Fortunately, components of assets represented in state assets register are just real estate, stock and shares in companies, while other components of state-owned assets are not contained in that time. Data value of non-financial assets are generally not stated, and of course, without that, them, it's not possible to produce financial statements. Ordered by the Audit Office to undertake the necessary activity to complete the asset register, but this register should be supplemented so the balance sheet of the state budget could be prepared. That is, that the register should contain data necessary to input into the general ledger, so that the particular necessary data on non-financial assets. Say that nothing can move us forward rather than state audit findings, since the audit findings have been submitted to the Parliament. In 2012, Ministry of Finance launched the project financed by a World Bank grant, accounting of state-owned non-financial assets. The goal was to determine the methodology for comprehensive valuation recording of state-owned non-financial assets and reporting, therefore, in the Central Asset Register, and also the methodology for provision of bookkeeping on state-owned assets in general ledger of the state treasury. Project also explored, I think, I could also say the best practice, but I think most important delivered was instruction and guidelines on recognition, measurement, and recording of assets owned by the Republic of Croatia. Of course, if you are interested, we could share with you these instruction and guidelines. These instruction and guidelines present the key approaches in evaluation of state-owned financial assets, but for the so far not recording assets. I will especially say something about that, but at the end of this presentation. Procedure of the estimation of the value of so far not recording assets is now currently the obligation for all users, or also for all owners of the assets. They are obliged to carry it out within the framework of the regular procedure of financial records updating and ensuring of authenticity of their financial statements. What's important, Noel mentioned that in his presentation. Approaches evaluation of far not recorded assets, it was concluded that as soon as possible we have to get data on non-financial assets in balance sheet of the state. But we really do not have time to wait for the assets register to be completed. And that's why we concluded that in the transition period, transition period, the data on non-financial assets will be obtained in the sheet of the state budget by consolidating the balance sheet of the budget and extra budgetary users of the state. The budgetary and extra budgetary users run via balance sheet the non-financial assets they are owners or users of. Truth, some non-financial assets are no records at, or all the records are incomplete. This represents a risk which have an impact, I could say, on the truthfulness and completeness of the data in financial reports. But the issued instruction and guidelines help us to improve it. Does not mean that we have given up the fact that in one place, asset register, we have all data on non-financial assets, from which we will pool the data into the treasury and into the balance sheet of the state. But the more time will be needed to upgrade the register that can satisfy the needs of the state accounting. The asset register should be in the future in the function, of course, of its volume in the balance sheet of the state budget. The intention is to achieve that the assets that certain subject is in trust, the management thereof, are an integral part of central asset register. But at the same time, that the assets are not part of the balance sheet of that subject, what is now the situation we will use. It's necessary to positively use this practice in the beginning phase of creating the coherent records on non-financial assets. On the basis of the data from Central Asset Register, as I said, to create the complete balance sheet. And finally, as said before, previously mentioned instruction and guidelines gives the key approaches in the valuation of so far not recording assets. This is one of the important preconditions for carrying the coherent records on non-financial assets in balance sheet. There are several key approaches to valuation of so far not recorded assets. If the not financial assets cannot be evaluated according to market principles, then the valuation is determined on, Susan mentioned also, on the basis of the estimated cost of replacement, by taking into account also the level of write-off, and on the basis of the alternative usage or one monetary unit. Users. It's simpler for evaluation to be taken by an authorized evaluator. That costs a lot. That is why it is instructed to carry out internal evaluation by setting up with the institution, within the school, within the kindergarten, within all budgetary users, working commission that will determine the value of so far not recording assets. How? On the basis of the approximate comparative method. A specific type of asset, which belongs to category of, for instance, cultural historical heritage, non-saleable natural resources, structural objectives, can be bid by one kuna. Extremely important to point out, that bookkeeping values, non-financial assets, that by such estimation, estimation carried out in the ways of under internal estimation or in amount of 1 kuna are relevant exclusively for the purpose of reporting in balance sheet, and not, for instance, for the sale purpose. That is all for me. Thank you very much for giving me this opportunity to share with us Croatian experience related to this topic. Thank you much.
Thank you. Even presenting Croatian experience. Thank you also for offering instructions and guidelines. I think it might be useful for countries that are establishing or maintaining the asset register. So we would really appreciate if you could send us the documents. It was very interesting also to hear linked Croatian experience to what was previously said by Suzanne and Noel. And I'm curious if our Slovak colleagues also challenge you and the other experts by their Slovak experience. So I'm inviting Lucia Čiarova, a project coordinator at Ministry of Finance of the Slovak Republic, and Peter Ivanek, a director of the overall State Reporting Department at Ministry of Slovak Finance, to present their experience in their country.
Thank you, Nina. Thank you for the opportunity to share our experience with accrual accounting implementation. We'll try to focus on financial assets during the whole presentation and introduce and speak about our implementation, our reform in accounting. At the beginning, we'll shortly describe the Slovak accounting system in public sector before the accrual accounting implementation. We will describe our current accounting framework. We'll also speak about areas where we or all public sector entities in Slovakia need to improve. Experience. We know that the accounting for state property for non-financial assets is very complex, difficult, but also very challenging for accountants. At the time, the value of non-financial assets is very significant when you compare it with assets. In Slovakia, every budget user and every public institution is obliged to prepare financial statement on a yearly basis, and additionally, Ministry of Finance prepares consolidated financial statement for central government. We want to demonstrate to you the importance of non-financial assets, so we picked some numbers from this consolidated financial statement. The number at the bottom, value of total assets, financial and non-financial, from this consolidated financial statement. Here you can see the split of non-financial assets, which the assets which are held by budget users and institutions, and the assets which are held by government business enterprises. So we count this number together, we come to 21 billion euros. So that means the non-financial assets are approximately 1/2 of total assets in the balance sheet prepared at the end of December 2016. So really a big part of total assets. About the actual implementation, the actual implementation all depends on starting position of the country. And I have to say that we had a good starting point. Before the actual implementation, we had the 5 accrual accounting systems. That means that every entity in Slovak public sector had to record for non-financial assets, and entities also kept the asset register. However, they're not obliged to account for connected expenses for depreciation, and for impairment. As to point the main changes connected with actual accounting implementation, all wish to increase the quality of accounting data, the quality of assets register. First, we need to track the new. For example, in case of state property, we need to track information about the useful life of property, and also about the fair value of property. This new information were already followed by other departments, not by financial department. So the accountants in public sector need to communicate with procurement departments or with departments which are responsible for management of property. Also connected with formal information flow, so every public sector entity needs to change internal processes to get this information on a regular basis. Several years after the accounting reform, every budget user and every public institution prepares the fiscal reporting, statistical reporting, also general financial statements. Statements are published in one central register and are available for all citizens, so everybody can look at the financial statement, for example, of Ministry of Finance or of every other ministry. All the entities are also obliged to keep evidence of state property, long-term assets about given threshold, including the assets register and including of all records of asset movement. Every user and public institution is also obliged to develop and maintain accounting policies connected with accounting for non-financial assets, for example, the depreciation policies, impairment policies, and verification process. For example, today, our ministry started the verification process. Some of our colleagues started to physically count and observe or non-current assets like tables, furniture, computer, etc. Everything has to be done, of course, in line with accounting registration, and it will continue to describe or to discuss our accounting legislation.
Hello everybody. So I continue with the regulatory framework which we use after the public sector accounting reform from 2008. Our Slovak national accounting standards are based on principles. We cannot say that we use IPSAS. National standards are not equal because we have some differences in IPSAS. We adopted main principles of actual accounting and also principles which are linked to the preparation of consolidated financial statements. Also, our standards have not the same structure or form IPSAS has. Some standards or its statements, I mean IPSAS, were too difficult to be applied in our conditions, and also the wording of IPSAS are used to say that they are very tough or difficult for public sector accountants. So these reasons, there are some differences. For example, we do not use a fair value model, or we do not apply IPSAS 16 for investment property. To emphasize is cooperation with external experts, for example, from audit companies, universities, and other specific organizations during the preparation phase of new actual accounting. Next step, after the standards were finished, these experts were providing for us trainings, also trainings for all public sector accountants. So cooperation was very useful and very usable, very valuable. What is the regulatory framework in our country? The Ministry of Finance is the only one standard setter responsible for all legislation framework, also for private sector entities, also for public sector entities. Certain levels of accounting regulation. Law is the law on accounting or act on accounting. Basic legislation for all forms are considered as accounting entities. Accounting is also in line with all EU directives. For example, the fourth directive about financial statements, the directive for consolidated financial statement, and other directives. Accounting contains general definition of assets. It is a very general definition, and Susan Flynn has mentioned it. There is the definition what is asset, but it could be difficult for public sector entities because the outputs or outcomes of economic transaction, and it is almost certainly that in the future will lead to increasing of economic benefits to public entity, and these benefits we need to measure. We must be able to measure reliability. Some doubts or questions: which economic benefits can this asset provide to us? If it's, for example, building for office. So what is the future benefits? New fees or new taxes? I know that in case of building, it is very clear that it is asset and fixed asset. Maybe in case of smaller equipment, it could be questionable. Methods are used in regarding to the substance of accounting case, if initial recognition or subsequent evaluation. Also, accounting is also defined classification on tangible and tangible assets, short-term or long-term assets. More about booking or procedures. Ministry of Finance described that in measures or decrees. We can divide for private sector entities and for public sector entities. Within public sector, we have special procedures for social company, insurance company, and non-profit organizations. More budgetary and semi-budgetary organization, local self-government units, and higher territorial units, and also state funds. Down all necessary procedures how to keep accounting. Also there you can find our chart of accounts and our form and structure of financial statements, and time and place is defined in this. Imagine the central government contains 800 budgetary organizations and then 100 semi-budgetary organizations. On the local self-government, there are more than 6,000 public sector entities. So for a small country as Slovakia it's quite a lot. The measure has form of paragraphs. It begins with general information. What is the accounting case? The date of recognition in case, creation of analytical accounts, adjustments and provisions, and details. These are binding for every public sector entity. And something is not very clear, or our current public accountants have additional question. Ministry of Finance provides something like guidance or methodological regulation. For our assets, we provided to this moment for depreciation or how to set a depreciation plan. These our accountants have different meaning with depreciation under the accounting and under the tax. Second guidance, change in accounting estimates or heritage assets. What heritage assets? And we will not report heritage assets in financial statement as additional comment or additional information in a note to the financial statement. Because able to say the price or the value of this special type of asset. Also, control asset, when the asset is transferred from one organization to the another, but it is still within one budget chapter or whole central government. The main goal which we want to follow up through this guidance is to ensure right valuation of assets and reporting only assets that have met the criteria. We don't want to overestimate or underestimate state assets. What we consider to be as an asset in the state accounting, we have 3 criteria. A longer utilization for a longer time or longer period than 1 year, and also we have done some thresholds for valuation in the date of acquisition. It is 1,700 euro for tangible asset and 2,400 euro for tangible assets. These thresholds are given by income tax law. So Ministry of Finance has not separately or any other limit for the valuation of assets, but it's through the tax law. Measurement, we use cost model or historical cost, and if we find out some asset that was not counted before or during the inventory, use replacement cost, and third we use only for special non-exchange transactions. The second measurement we use cost model, or with the reflection of accumulated depreciation and accumulated impact losses. I think so. Data reported all assets, financial and non-financial, in statement. Each public entity has own register for asset, and it is linked with general ledger. On the first level, on the level of entity, and we can see all the assets, the valuation, depreciation, the amount from the 1st of January until to the end of the accounting period, and all we have additional comments or additional tables about assets, about movements, and additional in the notes. On that level, we can aggregate all balance sheets from central government and all balance sheets from the public sector in one financial statement. And for the purposes of consolidation, we must have information about reciprocal transactions. Want to look at our register and which information we have. The book value, description of assets. Very important is who is manager of this asset, is located, and also from audit and subsequent control, from which financial sources was the asset purchased, or both. And that was my contribution to this presentation, and now I'm giving the word to Lucia.
So I'll continue with the problems we have. The accounting for non-financial assets. This slide you can see summarized issues which were identified during the audit of consolidated financial statements prepared for self-government. So by many budget users, the depreciation policy does not reflect the actual useful life of property. Many budget users do not review annually the assets for non-financial assets for impairment, or they do not review the asset useful life or depreciation method. Some budget users do not record the transaction connected with disposal or purchase assets in the timely manner. And some budget users also do not have supporting documentation which would support the fiscal cost of assets. So when we summarize all activities which are connected with accounting for non-financial assets, account management of non-financial assets, in accordance with keeping the fixed assets register and reconciling this asset register with general ledger. I also put in annual checks for existence, the verification process. I've improved in purchasing procedures or with accounting for purchases and disposal of assets. Record this transaction on the timely manner. And we need to improve in annual reviews for impairment and with in annual reviews for useful life and depreciation. Accounting implementation is an ongoing process, and there are always areas where we can the areas what we can do better. Definitely, we also feel the same. What already Susan and Noel mentioned. The biggest challenge during the accounting implementation is to learn how to use this information with accrual account system provides. In using accrual accounting, while preparing fiscal reports or by preparing the financial statement, we also put in using this information for budgeting and managerial planning. So this is still insufficient, and Ministry of Finance has an ongoing activity to promote the outputs from accrual accounting system that also measure and use these outputs by their work. So Finance promotes unification and centralization of economic system in central government. Ministry has a program underway to unify this system to have better access to data of user and public institutions. Because the standards, international standards are developing, there are every year some changes. We need to consider these changes, and we can also mention the EPSAS development, the development of European public sector accounting standards. We will need to watch or to consider this development of these standards. So these are our future activities. Thank you very much.
Thank you much.
Everything from our experience.
Thank you very much for your presentation. And since we ran out of time and we didn't receive any questions, we'll finish this. I would like to thank all today's speakers who offers their knowledge and experience, and making this webinar a valuable experience for all of us. This is also a good starting point for further discussion. We will organize a second webinar session on the same topic next year in December. So I would like to challenge all listeners to share with us the feedback on this webinar and to share with us what they would like to learn more about this topic. I would also thank to Elvedin who shared his how this is in Bosnia currently. I see there are a lot of challenges, so we will try to address some of these challenges to help Bosnian case and also other constituency countries. So stay tuned, give us your comments and suggestions, and we will try to address them in next. You will be able to find on the CEF website also all the learning events which are published for this year and soon be published also for 2018. I would like to thank also to listeners who enrolled in this webinar and participated in this presentation. So thank you very much to all of you, and wish you all the best.